Hello and welcome back to this course on usually. We have discussed rooms department module and F&B module in the last two videos. We covered the revenue, the statistics, the expenses. This time we are going to discuss about the other operating departments. Now, other operating departments in many hotels are varying from their size, their facilities, their location. In each hotel, usually you will have some of the other operating department which can be of significant importance. For example, some hotels may have spa as a biggest department. Some hotels may have adventure sports. For some hotel, it can be a gift shop. Some hotels can be a golf course. Comes up for other hotels, it can be anything else. But every hotel may have certain other operating department which is giving an extra revenue apart from the main room department, i.e. rental of the rooms, or from the F&B department. So usually the format of the P&L would remain the same. As you can see, revenue and less allowances. Here, for many places, you don't really split the revenue into the other lines. For example, in rooms, we have transient, group, other operating revenue. In F&B, we have food, beverage, miscellaneous, audiovisual, and service charge, and other things. In minor operating in other operating departments, usually you will have only one line, revenue less the allowances. Hotels can make a split of these revenue into different lines. For example, the spa can have therapy, can have a facial, can have a body massage, a oil massage, or a foot massage, just to understand how the revenue has been contributing, which type of revenue is more or less. But that's not requirement by usually for the main P&L. Then you have the other line, which is cost of sales, which is again direct cost of sales. We will be looking at the definitions of different departments which are prescribed by usually, so that you have a clearer understanding of what goes into revenue and what kind of different lines you can have, which is in compliance with usually. Then you have cost of sales, gross profit, and then as usual with the other modules in the rooms division, you will have salary, which is divided again into management, non-management, and other line items. And you have the other expenses, which is usually the cleaning, cluster, supplies, which is pretty standard. They are most of the expenses as you will have in other operating departments. However, there may be some other expenses related to that particular department, which you may want to put as required by usually as well. The hotel can decide what are the major items. For example, for a golf course, it can be the green fees, or it can be the landscaping, or it can be the for a spa, it can be a commission for the therapist, or it can be any other line item which is not mentioned in this P&L, but the hotel feels is important for them to understand, to be able to evaluate the hotel performance, so they can add and delete any items from here. So now let us look at the some of the departments for their revenue. So we have here golf course. So the golf can have certain line items like golf course and pro shop revenue, which will allocate the maybe it can allocate the package revenue. Normally, sometimes the room may sell the hotel can sell guest rooms inclusive the package, which means that the use of golf course can be free, or you can maybe get some credits from the spa from the shop. Means that you need to there need to be an allocation of the revenue from room diversion, i.e. reduce package allocation from the ADR to their departments. In minor operating department, other operating departments, that usually is quite a big part of the revenue. Then you have direct sales. So there may be guests who may not buy the package but may want to use the services. So that services that sales will be here. And also the if outsiders are coming, so you may have charge as to the third parties, so that revenue will also be calculated in the green fees, in the pro shop revenue. So the golf can be divided into primarily green fees revenue, means you are charging a green fee for the playing golf, and you are normally providing certain services. It can be membership, or it can be a one-time fees per player. And usually you will have a different fees for the members, for the resort guests, for the public, or other things. So you may be charging a different fees for the greens. And then you will have some tournament fees revenue. The hotel can maybe running the tournaments for which you are charging the customers for playing the golf in the organized tournaments. So you want to separate it out, because tournaments are not a regular feature. They happen once in a year, or once in 2 years, or twice a year. But the green fees is a regular income day by day. So that's the difference between green fee and the tournament fee. Otherwise they practically are same. They are being charged for letting the guest play into the golf courses. Then you have golf cart rental equipment and golf equipment. Sometimes the guest is not bringing their golf equipments. So you may have a revenue charge line item for charging the guest for the rentals, golf kit, the balls, the kits, the other parts of the golf equipment which you will have, maybe shoes or other things. You have golf cart, which is usually required in the, because the golf carts are huge. You cannot walk them all of the whole day, right? So sometimes guests take the golf carts, and sometimes they also take assistants with the golf carts to practice range, to for playing with them. So they may ask professionals for teaching them how to play the golf. So that can be an additional revenue. Then you have practice range. Some hotels may have a practice range rather than the full golf course, so you may be charging them. You may be selling the equipments, merchandise. So you may be selling the shoes, you may be selling the golf balls, you can be selling the kits, you may be selling the polo t-shirt, shirts, or the hats, or whatever you have in the shop. So that again is a additional revenue source. Then you have some storage fees for keeping the personal lockers. Usually if it's a member, these comes for free, but it can be another charge that the golf resort may charging. Then you have membership fees, which is a fixed fee which we are charging from the customers for joining the golf course and playing here. So that fees will be going to the membership fees. Or you may have tier membership, lifetime members, or annual members, so you can charge them separately. Then you may have clothing which you are selling from the golf shop. And then you have miscellaneous other revenue, which is usually you will have any other things that you may charge the customer from the golf, maybe damage fees, or maybe a one-time fee, or playing fee, or it can be mandatory or can be non-mandatory. So that's the golf revenue. As usual, there will be allowance all the time, because you may have in error of service, not error in posting, but error in service. So this allowance will be deducted. So in a nutshell, the golf course revenue will be a combination of um, green fees, tournament fees, green cartel, golf cart rental, golf equipment rental, practice range, golf course maintenance, storage, membership fee, merchandise, and clothing revenue. So that's the golf course expenses, golf course revenue. When it comes to the cost of sales, the cost of sales of the golf revenue will be for specific item which are being sold, for example merchandise or clothing. You don't have a cost of sales for green fee, because that's not a direct cost of sale. You cannot identify for the revenue. Usually you are getting membership fee for playing, for locker, for the public area, for the buggy. Once you have bought a cart, you may be charging a rental for it, but usually you will have a fixed cost of charging the golf cart. So you can, this is not a cost of sale, it's a part of investment. so you don't have that kind of expenses. But you need to match the cost of merchandise with the sale of merchandise, cost of clothing with the sale of clothing. Usually, if these items are on consignment, usually the hotels may not buy these merchandise and clothes and keep in the shop. In fact, it can ask the some other third parties to put the items into the hotel and then sell it, so as a consignment. So whether the revenue should be full or only the margin of the property, it depends on what who is setting the prices, who is responsible for the losses in case of any damage, who is responsible for the quality of the products. If there is something wrong, who is going to make good of it? If it's a supplier, then means hotel does not have any responsibility, it's just providing the space for selling it. Means that only the net revenue should be coming uh, under the revenue, and there should not be any cost of merchandise sale. But if the hotel is setting up the prices, hotel is responsible for the quality, hotel is responsible for the collection, hotel is responsible for everything, then it will be a revenue for the hotel, the full amount, and the amount that you need to pay to the supplier will be regarded as cost of merchandise. If you are giving certain items of the merchandise sales to the third parties, means to the guest as a complimentary, it will not be cost of the merchandise sale, it will be cost of the complimentary services under the relevant department, whether is you are giving it to the rooms, whether you are giving it to the F&B. So the cost will be going into their related department. Next video we are going to discuss about the labor and other expense.